You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com. as well as from this little thing we like to call the Options Insider Radio Network. A legion, a plethora of programs available on that network for your listening pleasure. Of course, if you want some more basic options information, lean towards the Options Bootcamp, the Options Playbook radios. If you're more active on the retail side, well, then you tuned into the right program here. For those of you who like the volatility space, of course, Volatility Views. If you're into the hardcore tech side of the scene, then Trading Tech Talk would be the program for you. If you're a futures options guy, well, we got two for you, Futures Options Roundtable and the long and short of futures options. And if you want to hear my interviews, my chat sessions, my Charlie Rose, if you will, program with the derivatives industry as a whole, the heads of the brokerage firms, the exchanges, the trading firms, asking all the questions you want to hear answered, then check out our Options Insider Radio program, daily news show, our Options News Rundown. Lots of cool stuff cooking on the old network. Check it out, because I think you're going to like them. And of course, while you're doing that, perhaps the easiest place to find all of that programming is our mobile app, available for iOS, Android, and even the much ballyhooed as of late Amazon Kindle Fire OS, or just Fire OS, I suppose they call it. We have a version for you guys as well. So for the handful of you out there who are rocking Fire OS, you can check it out as well. No discriminating here. You can instantly stream all of your favorite episodes of the Option Block. You can download some for offline listening, maybe on the plane or on the train. And then you listen into a show, you say, I really don't agree with that Sebastian guy. He's kind of crazy. Let us know. Hit that comment, hit that feedback tab. You can shoot us a Facebook question through the app, tweet at us through the app, shoot us an email, even leave us a voicemail, all through the app. Pretty cool stuff. Check it out, the Options Insider Radio Network app. I think you're going to like it. All right, and joining me on the old all-star panel today, starting off beaming in from the headquarters of Options Express by Charles Schwab, he of the myriad fancy hats, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Mark, it's good to be here. Lots of news. I have so much news, I am bubbling over.
Wow, bubbling.
And I weigh over 300 pounds, so when I bubble, it's much more of a gurgle than a bubble, but lots of stuff going on today. We need to spend a few minutes on gold. Look what happened to gold today with the Sunnis taking Saddam Hussein's old chemical facility. The game got real interesting today.
Well, if we're talking gold, we have to bring on this other fellow, our resident gold bug, none other than Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always happy to be here, especially on a day when gold's up as much as it is. Makes it even happier for me. What's that song? Because I'm happy with a room without a roof.
Yes, I think that's exactly how it goes, sir.
My daughter loves the song, so
it is a catchy song. I can't fault her for that. Excellent taste. And last but certainly not least, the greasy meatball himself, Mr. Mark Sebastian, who has been called away momentarily, but will join us in the midst of the trading block. So let's get to it. Without further ado, it's time for the aforementioned trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is, of course, the portion of the show where we break down what was moving, what was lighting up the old tape, what was catching our eye in today's market activity. And from a broad index perspective, not a heck of a lot. Most of the major indices slightly unched up or down on the day. VIX cash also slightly moved. No big deal there. Like Alex alluded to, it wasn't a broad index day. It really was in some of the micro names where the action was located. And since we just touched on it at the top of the show, let's just start off there in the realm of gold and GLD. Some interesting stuff going on out there. GLD, the preferred method for a lot of you out there to get your gold exposure on, closed up today about 3.5% or about 4.25 handles to roughly 127 on the day. Uncle Mike, walk us through the day that was from your gold bug perspective and then whatever else caught your eye in today's activity.
All right, a couple things in terms of the precious metals. Gold is obviously up. I've been watching silver for a while, and then as soon as silver, my mark where I wanted to get into silver was as soon as we currently had a half position in silver, and as soon as it got over the 19 mark, what we wanted to do was add to that position, and so obviously we did that early this morning. I feel that even though looking at GVZ today, it is up over two handles. It's up to almost 20% on the day. GVZ is the gold version of the VIX. Even with that, I feel that volatility is still relatively affordable for the moves that we might be seeing in gold in the near term. So with silver, as an example, also just kind of correlates with gold, obviously. In lieu of buying more shares of SLV, I just bought a bunch of calls. Bought a bunch of July 19 calls. It was around 1940 when I actually got into it, and I'm just buying premium. With GLD, obviously on the rise today, I was waiting for it to either kind of stall out or kind of do something, but the darn thing just kept going up. So current position, or the position going into the day with GLD, was long the underlying, long the 118 put for October, and financing that October put, we were selling put spreads against it. This week, we were at this week's put spread of the 120, 122 put spread, closed out the 122 put for a couple of pennies early in the day. So technically, I'm actually long as stupid right now in gold because I still have the hedge leg of that. So for another day, I'm going to be long as stupid in gold. So my fantasy is for gold to be cut in half today. So that way on my lottery ticket option that I'm in, that's always been my dream. But nonetheless, it's one of those options that has no bid on it, so there's nothing I can do about it except for brag about the fact that I'm in a stupid. So
that's worth it in and of itself, sir.
That's what I was thinking. But the core holding, or the core put that we're using as the hedge, we rolled up from the 118 level to the 126 level for October. We rolled down this put when GLD went down a few weeks back. We rolled back up. I believe we got about a $5 credit to roll down, and we got about a $2 debit to roll back up. So this is one example of where doing stuff can really be beneficial, because we're in the same position that we were a few weeks ago. And by, as a wise man once said, doing stuff, we were able to benefit from it.
You know, it's interesting you mentioned GVZ. We, of course, discussed it on the last episode. That is indeed the gold volatility index. And you're right, Mike, getting quite a bit of a pop, up nearly 2.5 handles today to 14.48. We had discussed on the last episode, as well as on our Volatility Views program last week, that gold was in a volatility malaise. It was just continuing to drop off. The product was dropping. The vol was dropping. It was an interesting scenario out there. And we also discussed on the last show how GVZ not really lighten up the old tape from a volume perspective. We couldn't really understand it, and we've talked about it before. VIX is hot, gold is hot. Put the two together, not so much. Last time we looked into it was, I think, a 6 lot had gone up. Today, with the underlying moving nearly 20%, we saw some activity out there to the tune of, it looks like, one big trade, Mike. It was a 17 risk reversal. Went up 80 times for a whopping 160 contracts. So there you go. If you wanted to play in GVZ today, essentially you had one trade to choose from.
Well, it's kind of like bleach and ammonia. They're good products apart, but when you bring them together, apparently they don't mix.
Yes, apparently GVZ is analogous to a toxic gas cloud.
I guess so.
Speaking of toxic gas clouds, we are now joined by Mr. Greasy Meatball himself. Mark Sebastian, what's your take on the day that was? We were just talking about GVZ. Let's start there.
I on my show on SIBO TV, Track the Trade, I made a comment last week that VXSLV, which is basically GVZ for silver, was not just touching like multi-year lows, but was touching multi-decade lows. And things had really gotten out of hand in terms of, the precious metals. They were, beyond even what we're seeing in the equity markets. The vols had been so torched. They were just a screaming buy, and again, we're seeing the fruits of that this week, and certainly today as gold and silver absolutely exploded. On the equity side, I'm without. I think we're going to see a 9 handle on the VIX, maybe this week, maybe if not this week, then next. That's kind of what I think is coming.
That seems to be where the narrative is shifting, and we'll get into this a lot more on vol views, obviously, but the narrative for the past few weeks from a broad VIX perspective has been, VIX is too low, it's going to revert. Now we're starting to see the other side of that fence coming in. I've seen multiple outlets starting to pontificate on a single-digit handle in the VIX. So we'll see. Perhaps the mood has shifted. It's not too low, it's too high. So people are perhaps waking up to what we've been saying on the other program for a while, that there is no vol in the markets. So even from that limited perspective, VIX is perhaps still a wee bit top-heavy, a wee bit pricey. Alex, you said you had a lot of news catching your eye, lighting up the old tape over there at OX today. Why don't you regale us with some of it, sir?
Well, I was going to save some of it for the Express Block, but let me
do
just...
Express Block Light, Express Block Preview, if you will.
Okay, so couple things. We talked about the release of premium harvesting for IdeaHub, and of course, 2 of the products in there are crude and gold. And as soon as we brought them up, the vol popped in both of them. So whoever's responsible for the vol pop, thank you, because it's driven attention to the futures options premium hub. And the other thing that's happening, and I know I talk a lot about premium harvesting, and for a while we weren't really talking about premium harvesting while we were rushing to bring the futures product out. But we're now going to bring out the entire SIBO volatility metric family. So for those of you who may not be familiar, what we do in premium harvesting is we take the VIX and we use that volatility metric to create credit spreads on everything the VIX covers, which are things like the SPX, the SPX PM, and the SPY. When we built the hub in 2012, we didn't include things like the gold miners or the silver or the Brazil ETF or the emerging markets. We're not going to build them all. We're now going to run the metric on everything, and a lot of those things have much bigger liquidity than they did in 2012, especially things like emerging markets. So at least over here at OX, that is very exciting. In terms of what else was going on today, 2 other big events. Obviously, we talked about gold, and Mike Zarensky and the futures team were trading gold with both hands today, and the equity side was very active in the GLD and silver, big pop in silver today, almost an 80 realized volatility in silver today. And the other kind of preview is a perennial favorite up here that had really slowed down a lot, Lululemon. Well, they killed it last week when it missed earnings, dropped it down to 36. It's had a stealth rally over the last week, popping up over 40 again. And apparently a lot of that has been sitting in what we used to call living dead. types of trades where customers were saying, look, I'm not going to do anything with it until it gets within striking range of my break even. And jokingly said that Twitter is the new Lulu. Well, today Lulu was the old Lulu, and nice popping in over the last few days.
Speaking of nice pops, or perhaps lack thereof, we also saw some action in another big retail-friendly, and I'm sure OX-friendly name as well. That's, of course, Amazon. They took the stage this week with their big announcement, an announcement that had been leaked many, many months in advance. I remember hearing rumors about this 3D Amazon phone, probably 6 months ago. So it's been out there for quite a while. What they announced was a little bit different than everyone expected. It wasn't exactly 3D. It was some sort of rotating perspective type phone instead with some cool things. And, of course, a lot of hooks into their Amazon ecosystem allow you to take pictures of stuff and buy even more products, which is probably the last thing I need. I'm a pretty big Amazon junkie as it is. So the last thing I need is something else to drive me even more into their ecosystem. Of course, from a trading perspective, the market buying the rumor, selling the old fact, perhaps not as bad as you might have thought, only off about 2.25% today, or about 7.5 handles, down to 327 on the day, 327 even actually for the close out here in Amazon. Implied vol coming off a bit as you might expect post-announcement, but also perhaps not as bad given the fact that we saw a sell-off as a result. Front month, I hate to even call, front week, I can't even call really what's going on out there in vol, so I'll move away from the front week, but we saw pretty much not as big of a vol implosion as you might have expected given the build-up to this announcement and how much of a lead time we had with it. Perhaps people thinking this may actually move the needle for Amazon a little bit. Mark, did you guys chat at all about Amazon and their post-announcement movements in your chat room today?
Yeah, not today, but we've been looking at it for a while, and it's pretty amazing that the way that thing continues to move. And they're just – apparently the rule is with Amazon, they produce a product that they're not going to make money on, and the stock goes up. And that's what we're seeing. Its stock was down today. I think it did get a little overheated. But honestly, I don't think vol's that high. It's kind of high, but not – it's not like it was smoking hot into any of this stuff. So – prior to an earnings, you'll see this Amazon vol get into the 40s or things like that. And, this is still just kind of relatively light. It didn't get bid up and isn't really being sold off. So that's probably that's why it's behaving the way it's behaving.
Yeah, I think probably some of that just due to the protracted nature of this announcement. This was leaked a long time ago. It's kind of had been baked in quite a while ago. It's like most of the months hovering around the high 20s, low 30s from a vol perspective. So not a heck of a lot to nowhere really for it to go at this point. But you're right, interesting stuff. I don't know. That phone's kind of dangerous for a guy like me because they might make some money off a guy like me with that
phone. I don't know. Are you saying they're threatening to make money? I don't know. It's Amazon. It's like sacrilege for them to actually produce a profit. You didn't know that, so. Another one we actually were really watching today was Coach. Did you see the action? They had their first analyst meeting, and the analysts were not happy, and Coach just got smoked. And interesting thing with Coach is just the way the brand is dying. It's gone from kind of a Neiman Marcus to a Nordstrom to a Macy's to kind of Penny's, and it'll end up being Target in terms of brand esteem and how much people like it. So I think Coach has a problem. One other little weird thing that happened today, Visa. All right, Visa front month vol, so June, that expires tomorrow. If you were paying attention, today the vol opened at around 17%, popped to about 35%, and then fell to 14% in a day, all today. So that was a really weird trade, and I'm not sure why that happened.
Yeah, I'm looking at Visa right now. You're right. That's a Nat Gas-esque intraday vol move like we saw earlier this year. I'm looking here for the news to see why that.
I could not find anything. I legitimately could not.
The underlying not really doing that heck of a lot. I mean, decent paper out there today, and we know paper drives vol. So, but what was underlying that paper is the big question, and we don't.
It looked like it was a combo of just terrible execution and somebody that just had a serious axe to grind on Visa. But I'll tell you, the June 205 puts were trading 60 cents, and a couple hours later, you could buy them back for a nickel.
Yeah, they're They're 3 cents at 11 now, and you probably could buy all you wanted for a nickel.
I mean, this morning I legitimately sold. I sold it at I had people selling them at 50, 55. I sold some at one at 40, and then I bought them back for a nickel. Not a bad trade.
There are worse ways to make some money. So you think someone just got some broker got hosed?
It was the old screw the customer trade. That's kind of my theory.
Hopefully not an OX client floating around out there.
Maybe it was a bad newsletter execution. You just never know.
That would be par for the course. So some of the ones we've seen out there, that wouldn't surprise me. Speaking of newsletters and unusual trades in general, if you guys made it out to our big unusual activity summit that we had last year, about a little over a year ago now, we profiled a lot of the studies we had seen out there looking at unusual options activity and how it relates to surprise and expected announcements, and how the preponderance of the data showed that there is a huge amount of unusual activity going ahead of these unexpected announcements, even more than the expected announcements. Well, we saw some more data coming in on that side of the fence. And since we talk a lot about unusual activity here on the show, it's worth diving into this a little bit. There was a study coming out of NYU and McGill in Montreal today. They looked at informed trading activity, quote unquote, in equity options before M&A announcements from January 1996 through December of 2012. And what they found is that 25% of the deals had some sort of unusual activity taking place 30 days before the deal announcement. The study, which came out just last week, noted the probability of option volume on a random day exceeding that of our strongly unusual trading sample is trivial, about 3 in a trillion. They said also that many of these cases go undetected, which is something we've talked about on this show many times, and that the SEC litigated only about 4.7% of the nearly 2,000 M&A deals that they included in their sample. The authors of the study said, according to our discussions with the regulator, which is the SEC in this case, they're being resource constrained. They pursue larger sized cases that provide the biggest bang for the buck from a regulatory perspective. And quite frankly, like we said in our event, and I've said many times, the large number of SEC investigations for stock trades relative to options trades stands in contrast to their finding of pervasive abnormal call option trading volumes that are relatively greater than the abnormal stock volume. So there you go, listeners. One of the reasons why we do the odd block here on the show every episode is because at the end of the day, when people are coming to play with serious insider money, serious insider information, they tend to use the options more than the stock. This study just proves that as well. And that, again, options are a decent indicator. I know we joke a lot that size money is not always the smart money, and that is certainly the case. But still, at the end of the day, if you're looking for some sort of insider activity indicator or smart money tracking metric, the options are definitely where you want to go as opposed to the underlying.
Sell puts. You will not get caught. Sell puts. It is so much easier. Stop cheating. Stop cheating the it's like when people cheat, they have to go all the way. And so if you're going to cheat, sell puts, folks. One more time. If you're going to cheat, sell puts.
Well, that guy in Dollar General a few weeks ago, he tried to disguise it. He put on some strangles and a few other things to make it look like he was perhaps doing something else.
Yeah, he did it like a laddered call stupid, but
yeah, pretty much.
It was just, the smart money says sell puts. Seriously. And the nice thing is you don't have to close it down, right? You sell the put, you get your $3, $4, $5, $10, I don't care. And you can just sit there and let it decay away, and you don't have that premium issue that you do when you own calls. So again, one more time, say it with me, folks. If you're going to cheat, everybody, sell puts.
Again, all of you have written in over the years asking why the SEC doesn't go after these. How many do they go after? Here you go, 4.7%.
Now, do you think 25% is a little light? I personally do.
Yeah, that was my one takeaway from this. If I had to say anything, I thought that number would be actually higher.
Yeah.
The other samples we've seen, other studies we've seen have shown at least a third, sometimes more. I think that varies by the range of activity. Some of the studies have gone back maybe a little bit farther than 30 days, like maybe 45. When you get to those levels, then you're right. Then the numbers can spike. And, of course, you can probably maybe take issue with how they view and what they define as unusual activity. I have to get into the actual metrics of the study to see what they call unusual activity. But that's a pretty straightforward barometer. If someone's doing 4x, 8x ADV, that's pretty straightforward. If I had any one question about this, is that why is it so low? Not why does it happen, but why is that number so low? Alex, Mike, does this surprise any of you at all?
A little bit, and the numbers to me don't add up, but let's not focus on that. I mean, the SEC says 60 to 70% of block trades aren't directional, 60 to 70% of stuff over 1,000. I got to believe some of this is cheating. I got to believe some of this are people doing the analysis who are looking at the same things that create the M&A. So it's clearly a little of both. You know, a week ago in Family Dollar, Dollar General, we saw it happen. Another reason we should start charging for the podcast, because you can't get this information anywhere else. But we are not encouraging anybody to cheat, and anybody who has material, non-public information should not trade on it. And nothing we say, we're all licensed now on this show. And
listen, I agree, Alex. You should not cheat. I wouldn't do it. All I was saying is, if you're going to cheat, don't cheat like a jerk. Cheat like a nice guy. Well,
keep in mind, material non-public. I can tell you great stories when I was at the SIBO, and one of the best stories that ever came out was the shrink of had a patient whose husband's company was in M&A, and the wife would come to the shrink and say, he's never home, his company's being bought, he's got all this stress and all this pressure. And the shrink went and looked at her, what we'd call the new account form, her patient history, and began buying the stock and the options. And company got taken over, and the shrink, I believe, is still sitting in Kansas, lifting weights in the yard, trying to stay away from Bubba. So don't cheat. And if for some reason you are a party to material non-public, but also understand there's people who run these screens all the time who do exactly that, and then they look at the unusual activity. They look at what drives M&A. Here, I've said on the show repeatedly, I think you're going to see more biotech M&A in the next couple of years, especially with all the cash that's sitting around. I think you'll see more tech and biotech M&A. There are trading firms and hedge funds that continually try to scan for what are the best opportunities. And, this is the problem, because if they're the firm that bought a couple thousand long-dated calls and then a couple weeks later it pops, they better have a good case file of research.
Since we're talking about illegal trades and unusual activity, I think that's our cue, listeners, to dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we break down the weird, the interesting, the unusual activity that's lighting up the old options market today. And since we just touched on some weird studies on weird activity and, of course, mentioned our old friend Dollar General, a lot of you have written in saying, hey, what's going on out there? And I just pulled it up here before the show, and it looks like a lot of that activity that we profiled in that name. Of course, he bought that big strangle and a ton of upside calls. Looks like a lot of that, listeners, is still open, remains unclosed as we speak. It looks like the only part that he really may have taken some off of, he did, I believe, a 50-60 strangle. That looks like part of that may have been closed. But the rest of it, the no 65, still nearly 21,000 open on that strike. And he went crazy to the upside in both Jan expirations. You remember, listeners, still 20,000 of the Jan 75s open and 20,000 of the, almost 20,000 exactly, of the Jan 2016 85s open as well. If you look at the near term here in Dollar General, looks like he really did. If he wanted to close it out in the near term, he did miss his chance. The stock is off a few handles now, trading around 61.5, got up to, I believe, nearly 66 on the news, and the vol has, of course, come off as well. So not all of these well-timed trades are taken off in the most timely of fashions, and perhaps Alex's speculation there that he was perhaps forbidden or blocked from taking that off could indeed be the case, because that was a pretty sizable one and a pretty obvious one that something was not right with that trade. All right, moving on to some of the other trades we're going to talk about today in the old odd block. It wouldn't be the odd block if we didn't kick things off with some trades in some baby names, some sub $2 names. We're going to kick things off with Verso Paper Corp, ticker symbol VRS. This is a name that closed at a whopping $1.88, down about 12 cents. So it was trading $2 this morning, and coming off of that today. This is the name that does about 1,000 contracts a day, doing nearly 12,000 today, and pretty much all of that, 11,146 to be precise, coming in a size trade on these D2.5 calls. When we profiled it, we profiled 9,500 of these D2.5 calls, going up for prices 20 to 25 cents. Went up in 2 blocks. Then towards the end of the day, we saw another couple thousand pile in after the day, like I said, to bring that total up over 11,000, about 10,400 open on that strike. So we saw more volume than we saw on the open interest. So it could be closing, or it could be perhaps more likely someone diving into some additional buy right paper here on this 2.5 strike. Given the drop we saw today, perhaps not surprising that someone would be piling in looking for additional income here, additional upside rights here in Verso. Is that your take as well, Senior Greasy Meatball, that someone's piling into more overrights? You think they're closing out on the 2.5 strike?
My guess is more overrights. That'd be my bet. Why wouldn't you, right? The stock just kind of stinks. I'd be selling these, especially if I was caught holding a bunch of this. And, the Verso paper is such an important industry and such an important company that, that's why these would be trading in size. In order of important companies, there's, General Electric, Apple, Amazon, and, of course, Verso Paper Corp.
I think you put Verso a little bit low on that list, sir, in my own humble opinion.
I apologize.
All right, and moving on to another newcomer to the odd block. This is Exterran Holdings Inc., ticker symbol EXH. This one trading for a little bit healthier, more robust $44.09, up about 83 cents or nearly 2% on the day. This is the one that doesn't really light up the tape from an options volume on any given day, doing about 700 contracts a day, doing nearly 3,400 today. So size-wise, certainly from a comparable size-wise, it was a pretty active day here in EXH. And what we saw in particular was what looks like a bullish risk reversal going up out here in November to the tune of, when we profiled it, 500 of the NOV 35 puts and the NOV 50 calls going up for prices of about $1.55 net on the trade. By the end of the day, it looks like another 2.5 times that much went up, about 1,200 each on that strike, on open interest of about 3,000 on the NOV 35s and about 1,300 on the NOV 50. So it's par for the course with the open interest on the calls. It's a little bit less, about almost half of the open interest here on the puts. So it could be a straight up bullish risk reversal, but it could also be probably someone unwinding some of a collar here. Is that your take as well, Senior Sebastian?
That's what it looks like. It looks like they're kind of unwinding the collar, but you just never know. Especially, it's always weird when part of it is opening and part of it looks like it's closing, part of it looks like it's opening. You never know exactly what the guy's doing.
And this is the common way to construct a collar, too. They like to hedge all of it, but only write the calls against portion of it in case the stock decides to run. Why he would unwind it in a different proportion, I don't know. But it is interesting to watch nonetheless. You'd think if it was a collar, he'd take the whole thing off, but perhaps not. You never know. No accounting for motive here in the odd block. We just parse them as we see them. All right, and that's all the time we have for the old odd block today. And now we're going to keep on rolling right on into Alex's favorite segment, because it's time for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms. including mobile devices. Visit OptionsExpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is, of course, the portion of the show where the Viceroy dons his cap and takes us behind the scenes into the land known as Options Express by Charles Schwab. Alex, you gave us a bit of a preview at the top of the show there in the trading blog about some of the cool new stuff coming to IdeaHub. I know you launched that tool pretty much around the VIX, like you said, and a few of the SIBO volatility indicators. You're now adding new indicators to that tool going forward. Is this, you think, the start of a new initiative for you guys? You think we can expect a lot more indicators being incorporated into IdeaHub going forward, not just SIBO VIX indicators, but who knows? Take your pick. This index, this number, and starting to key off a lot of different metrics out there?
Yeah, and we're going to build out the family. And as I said at the beginning of the show, it's a good day because of a lot of exciting news. And any day I get to talk about lifting weights in the yard and new premium harvesting tools is a good day. But we are I don't want to say we've been given the go-ahead. We've been asked to build out much of the original design, and the original design was to take all the SIBO volatility metrics and use them to create quantitative credit spreads. And the introduction of futures began to use the gold metric and the oil metric, and now we're going to use them all. And the interesting thing here is, and this is a little putting the cart ahead of the horse, but Dr. Whaley, the professor that created the VIX, has announced that he will be bringing forth an ETF that will track the cash VIX. Now, I know that's easier said than done, but if Whaley can bring out a cash ETF that tracks the VIX, then we can craft quantitative credit spreads in the VIX. I don't know if that will be later in 2014 or in 2015. A lot will be dependent on if Whaley's ability to build the spot, which a lot of people have tried to replicate in one fashion or another without any success. But that will be a cool product, because when you look at most brokerage houses, the top 3 or 4 traded option products most days are SPX, SPY, VIX. Generally the fourth is Apple. And sometimes the mix changes up. But VIX, as we all know, still has some opaqueness to it. And if we can craft quantitative spreads in it, if we get a cash product, and I know I'm being a little over analytical here, that will be cool. 2 other things I want to talk about. And one thing that I know we've talked about a lot on the show is the walk limit product. And I know we're in summer markets, and I know volatility is low. And you know, years ago when I started in the business and we didn't all look at VIX, we talk about it as summer doldrums. But the reality of low volatility markets is they're often accompanied by more generous bid-offer spreads. So if you're not trading spiders or you're not trading the IWM, and you are trading in stocks like Amazon, Apple, or even farther down the liquidity list, let's talk about walk limit. Walk limit is a product exclusively available here at Options Express. And what walk limit lets you do is it lets our computers work your order. So, for example, if Mark talked about selling a put when it was 60 cents, and let's just say, for the sake of argument, the market in it was 60 cents, 70 cents, you could have put the order in walk limit and said, look, I'd like to try to sell these at 64. OX computer, put the order out there at 64 cents. Leave it out there for a time that you can designate, 2 seconds to 10 seconds. And if it doesn't sell at 64, cancel the order, walk it down to 63, leave it out there for a time period you designate. And the worst case scenario is going to be sell it at 60, sell it at the natural. Walk limit doesn't cost any more. I know when we first introduced it in spreads only, the grumbling was, when is it going to be out there for single legs? It's been out for single legs for a while. Customers who use this love this, and it's not an embellishment. We've got sort of a cadre of customers here who use it and get it. They absolutely love it. There are no cancel fees. It doesn't cost you anymore, and it allows you to work the order. And in my experience, there's two times you want to work an order. You want to work an order when markets are nuts. So where do I use it the most? I use it on Expiration Friday a lot because I will have, two things I'm trying to roll. One, I'm trying to buy back and maybe, roll up and out. So it's a really cool tool, only available here at OX. So look at walk limit. Premium harvesting is growing. Premium harvesting for futures options has been out about a week now. And in that week, as I said, crude and gold volatility have popped. So our timing in some ways was perfect. But, come to the OX site, look at the tools. Premium harvesting, which is my kind of dream product, my baby. It was one of the reasons I was brought in here. We're going to build out the rest of the names. We're going to build out diagonals. We're going to build a new earnings session, and we're going to build a fly session. So there's lots of cool stuff coming. It's not a week away. Don't start calling me a week from now and saying you promised me flies, quantitative flies in harvesting. Why aren't they there? The product development team and the education team, we get July 4th off. So we're talking maybe third or fourth quarter of this year, but cool stuff coming.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. This is your opportunity to join us here on the old All-Star panel. Make your questions, your comments, your insights known to your fellow listeners of the program. A lot of great ways for you to do that. Of course, surf on over to theoptionsinsider.com. Leave a comment or a question on the show notes there, and we'll make sure to route it to the appropriate program. Of course, you can also find us on social media, twitter.com/options, facebook.com/theoptionsinsider. And, of course, the old-fashioned way, questions at theoptionsinsider.com. Just be sure to put question for the option block in the old subject line, or like a lot of you have done this episode and do every week, you can use the old mobile app that has all that stuff baked right into it, so you can hit the button and fire off your questions or comments, just like our listeners did here today, starting off with Shane Hamilton. He sends in a good one here like this. He says, "Hey, Mark, how about a new segment called the Success Block, where listeners submit winning trades and your cohorts comment on how it could have been improved, done differently, or kudos exactly the way it was played? Just an idea that seems like that might be fun. Besides, we all love to talk about our winners." So I like this idea, Shane. People come in and write in all the time with, hey, should I do this? Should I do that? But I think this is a different perspective on it to say, hey, here's what I did. Did I screw up? Did I do it well? What do you think? I think that's an interesting idea. What do you guys think? Should we add perhaps a success block portion to the mail block?
Well, I actually prefer they send in their losers so I can lambaste them.
I know which way you lean.
What I would say is send us all your crap trades that you got murdered on, and so that we can all make fun of you.
Yes, exactly. That's a great way to solicit a lot of great feedback.
It is, absolutely. So, that's a fine idea. I would invite traders to send both winners and losers, and we can kind of pick a trade and talk about it. I think that'd be a great segment.
Yeah, I think I'm with Mark on the straddle idea. If you have winners and losers, that's how you can learn from both of them.
Yeah, and I don't want people to think that all of our listeners do is win, because only most of our listeners, it's just 99% of our listeners that are big winners.
And don't worry, listeners, I'll dial Mark back if you do send a loser in, so don't worry about being mercilessly mocked.
Yeah, I think it's a terrific idea, and I would just add one thing. I would ask the listener to tell us the implied vol of the trade when they put it on, not only the prices and what the trade is, but the IV when they put it on and the IV when they took it off. And I think much of the conversation will end up focusing on not only the direction, but what happened in IV over the life of the trade. Because I think that second level of understanding IV is the real difference between a really terrific trader and maybe a trade where somebody was just, I hate to use the word, lucky.
those are all good ideas, and I definitely agree it doesn't have to be a success block. If you have a loser, there's probably more to be gained, and from a knowledge perspective, from dissecting a loser than there is a winner. But indeed, send those trades in. We love them. We love to see them. Sometimes you guys write in with, hey, should I do this? Should I do that? But if you've already done something, still send it in. It's probably a little easier for us to really get to those in a timely fashion rather than writing into us with a, hey, should I buy these weeklies in Apple? Because by the time we get to it on the show, trade's probably already happened. So better to look back a little bit and see what you did, and then we can dissect it a little bit. So send those in. I don't know if we're going to have a whole separate segment for that, but that seems like a great portion we can devote to the mail block and really start dissecting those. So you guys, if you have them out there, maybe Shane will start with you. You came up with the idea. You send in some of the first trades for the quote-unquote trade block or the success block or whatever we want to call it, the analysis block. We'll just call it the mail block for now, but start sending them in. We'll look for those here. Next up, we have a question from Mr. ITrumpDoom. Perhaps this falls in a little bit of that latter category. He writes, hello, if I expect a stock to move significantly over the next 6 months, but I don't have a prediction for direction, is it reasonable to sell a short put butterfly and a short call butterfly on that stock with all the long strikes at or very near the money? I think I would cover the risk in one of the flies by the profit in the other, since it would be impossible for both of them to expire with maximum loss. He puts in parentheses, not that I would hold to expiration. Is my logic sound on this? Is 6 months an unreasonable expiration to use on these given potential implied volatility increases? Well, interesting question. ITrumpDoom, he sent this in a while ago, and I mulled it over today before the show, and I personally, for the life of me, I can't really figure out a use case where this number of contracts and this amount of activity and volume would be preferable to perhaps just doing one of my own favorites, my straight-up iron condor. It seems like that would approximate the vast majority of this functionality with fewer contracts, fewer margin issues, and things like that. It's an interesting idea. I will certainly leave it there, but interesting one. I think I would lean towards the simpler side. In fact, I always lean that way when trading. Don't add contracts if you don't have to. Don't add legs if you don't have to. I think an iron fly will approximate a lot of this functionality. Do you agree, not agree? Perhaps let's start with you, Uncle Mike Tusaw. Where do you fall on this?
Well, so I guess why not just do one or the other is kind of what I'm thinking. Why, if he wants to do a short put butterfly, so what he's doing there is he's buying the body and selling the wings. Is that, or is he? Or,
no, what he's laying up is like two small butterfly out of the money butterflies, hoping that one will hit.
Yeah, and these are out of the money. I'm thinking of.
Yeah, and I think what it kind of equates to is basically. Let me make this simple for the listener. This is a terrible idea. All right, and over the long term, it will not make you any money. And you are wasting the only person who's going to make money on that trade is your brokerage firm. So, if you want Alex, who's above the board, will probably say the same thing. But, your brokerage firm is looking at that order and being like, awesome, getting some commissions. I look at that trade and I just think it's a terrible idea. Why don't you just, if you're looking to kind of reduce the cost of a straddle, which is what it kind of sounds like he's doing, why don't you just do like a short fly as opposed to, because he's thinking there's movement, right, Mark? So why doesn't he just do a short fly? Or like a ratioed fly or something like that. Or like you said, the iron condor, that's basically what he's creating. This is just ill-conceived.
Yeah, if you expect some direction in the next 6 months but don't know which way, there are better ways to do it than this.
There are a lot better ways to do it. This is just it's just not a good idea.
Alex, take us home. What's your take here for Mr. ITrumpDoom? Great handle, by the way.
By the book market wizards, Tony Saliba, one of the first people to really talk about this trade, and the guy who was on the cover of Success magazine after the 87 crash. So let's assume this customer can take some risk and really has a long-term perspective and simple trade, sell the straddle, buy two of the wings on each side, do them long dated. You're at risk. Okay, maybe you can put the trade on for zero, but that doesn't mean it's zero risk. You're clearly at risk between the strikes, and if you can afford to take that risk, but this trade has had a lot of names, some of which were off color. But in the early days of the SIBO, There were guys who would wait for earnings events and vol events, and Saliba did it in Teledyne. And the first time he did it, he lost money. And the second time he did it, he lost money. And the third time he did it, Teledyne did it every 3-year pop. And, the suitcase got too heavy to carry the money away. So, number one, if you can stand the risk, sure. Do you need to do flies on both sides? I think you're making it overly complicated. I would simply sell a variant of sell the straddle, buy double the wings on both sides, do essentially a 1x2 call and a 1x2 put. And you said it's going to take some time, so I would be patient. One way to do this, if you're going to actively manage, is sell the straddle short dated and buy the wings longer dated. And if you don't get some movement for a few months, and it does take a while, you'll end up owning the wings for a lot less cost. But I think there is a way to craft this, but understand it's going to have risk.
Great question here, Mr. ITrumpDoom. And just in his defense, he did write in a little while ago and say, hey, I think I realized my question perhaps wasn't the way I initially thought about it. So he kind of thought about it himself a little bit and realized that it perhaps wasn't the best way to go. So kudos to him for making that realization himself. We had already queued it up for the show. Plus, I think it's instructive for a lot of the listeners out there to see how people are thinking about trades. People are always thinking this way. It's like a roulette table. People are always trying to figure out some way that they think they could use some system that no one's thought about before. And chances are, if you thought about it, someone else has thought about it before, and probably there's a reason that they're not doing it this way. So at the end of the day, ITrumpDoom, and for all listeners out there, keep it simple. Your life will be much better for it, and your profits will probably be better in the long run as well. Unless you want to make your broker happy, then by all means, do extra legs just for the fun of it. All right, that's going to do it for the old mail block. Now it's time for us to roll on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're watching for the rest of this week into the old weekend. A lot of macro events on everyone's trading stations these days, on everyone's news ticker these days. Of course, we talked earlier in the show about gold and the impact of macro events on gold. On the most recent episode, we talked also about the impact on crude. So a lot of commodity action, a lot of commodity volatility as well as a result of some of these macro events. On a more domestic front, we also have some jobless claims coming out and the old Philly Fed survey as well to keep an eye on. Not exactly big vol, big market movers, but still, if you're looking for some stuff domestically to keep an eye on and trade around, you might have some action there. Other than that, Mr. Alex, we'll start with you this time. What are you watching for the rest of this week?
So looking at the events in Iraq, looking at a piece of news that just came across the tape that the state of New York has legalized medical marijuana. I now know that crowd standing in front of the New York Stock Exchange every day will be a much happier group of floor traders. But looking at the 10-year, getting a little concerned about what's going on in Iraq. I mean, this news today that the Sunni extremists have taken the chemical weapons plant, and everybody's doing analysis saying, well, they can't really use it. It can't be done. You know, these are the same people who said the extremists wouldn't get this far. So I'm a little concerned about that. If Iraq doesn't blow up, VIX is going to 8, and we're going to new highs. If Iraq becomes a problem, the U.S. market is going to be the cleanest dirty shirt out there. People are going to run to our 10-year. They're going to run to the equities. So even with a problem, we could get a rally.
All right, and Mr. Greasy Meatball, aside from preparing to move to New York, what else are you up to for the rest of this week? I'm excited about that. That definitely is great news for the state of New York. And I'm with Alex. I think that it could be a slow few weeks, and we get some sort of interim pop out of Iraq, but I'm telling you, 8 handle, that would be just spectacular. Theoretically, Alex, when would we have hit an 8 handle in the 80s at any point in time?
Yeah, we lived in the 7/8s in the 80s. It simulated data, but we lived in the 7/8s, and And of course, the classic example is most of September and October of 1987, we were in the 7s, touched the 6s, lived in the 8s. And of course, as soon as I say that, somebody says, yeah, but then you had a crash. The norm was 7-8 back then. And, the norm now of a lot of people say it's 20 because they talk about mean reversion. You can go bankrupt waiting for mean reversion in mean reversion trades. The question becomes, what's systemic volatility? What's kind of the lowest? And my view on that has always been it's around 5-6. It's around what you see in the realized short-dated vol. And I think that short-dated vol is the real measure of systemic. And, we can go lower. This market could take out 17,000 on the Dow, could take out 2,000 on the S&P, and you might see an 8 handle on vol. And, everybody would run around and say, well, low vol means this, means that. Before vol, these were just the summer doldrums. Mm-hmm. I think one thing we've learned is vol is an animal that anybody who tells you they understand it perfectly is full of hot air. Vol is what option trading is all about, and it's part science and part art. And I don't see any reason why we can't go back to the 7 to 8, the norm that I grew up with.
I don't disagree with you. I think that there is absolutely no reason that we couldn't. So I agree with you 100%.
And Uncle Mike Tusaw, take us home. What are you watching for the rest of this week, sir?
In addition to what Alex and Mark had said, numbers. Right now, we're on the we have within the next week or so, we could easily hit 2,000 on the SPX with gold coming up the way that it has. There's a lot of interesting stuff going on. I think that we're at an amazing opportunity right now for premium buying. I'm not necessarily bullish or bearish on the VIX per se, but what I like about it is the fact that just the protective puts with which I have against underlying, they're phenomenally cheap right now. And I'm way more hedged than I've ever been before and spending way less money than I ever have before on hedges. So it's an exciting time along those lines. And if you want to protect some profits, I think now is a great time to buy some protective puts. Or if you are continually bullish on the market as a whole, I think now is a great time for some call buying.
That could be the name of your next webinar, Mega Hedge with Uncle Mike Tusaw.
The mega hedge.
Yeah, I mean, if you're Mike, you're right though. If you're patient, there's money to be made owning premium, because one of the things that they leave out when they kind of talk about volatility is, if you're dynamically hedging every day, you're getting murdered. But if you're buying calls and sitting on them, you're probably doing pretty well right now. There are worse things to be doing than to be buying bull calls and call spreads in this market.
All right, speaking of webinars and things to do, let's start with you, Uncle Mike. What's coming down the pike over there at RCM Wealth Advisors?
In-person events coming up over the course of the next couple months. We'll be announcing them in the next few weeks. And then just once again, for those of you that have been contacting me that want to get started with retirement savings, appreciate the phone calls, appreciate the new clients with which I've made. If you're still interested in that, we still have some room left. If you're looking to put approximately a few $100s a month away towards retirement savings, give me a call, send me an email, 312-212-3531, or send me an email at mtusaw@rcmam.com. I've really enjoyed talking to everyone with whom has gotten in contact with me.
Maybe we should make that a condition of writing into the mail block. When they write in with their trade ideas, they get a free session with you afterwards.
There you go.
I thought we wanted people to write in.
That's right. Yeah, we want to encourage more, right?
All right. Since you piped up, Mr. Sebastian, what's coming down the pike over there at the pit?
Next Saturday, the 28th, we're doing a special 2-hour webinar on order management and risk management. It's $47, so dirt cheap. And, it's going to be a couple hours and should be a lot of fun. We've been really having a good time in the chat room over the last couple of weeks. I was trading up Coach this morning, and it was that was a lot of fun. So, it's things are good and it's fun and check out that webinar. I think you'll be pleased if you show up.
And Alex, take us home. What's coming down the pike over there at OX Education and Live Events?
3 events next week I'm going to showcase. There are more than 3, but 3 I want to showcase. Monday, Marty Kearney, my old friend, the Marshal, will be doing front spreads with puts. It's actually an alternative to a cash-secured put from a margin standpoint. Tuesday the 24th, and this is new at OX, and this is the Schwab influence, but we're going to do a webinar on cash bonds. We're going to talk about the physical bond, not the option, not the future, a way to put collateral in your account. That's being done with William Sterling Jr. And then Wednesday, June 25th, IdeaHub for Futures. Waited a long time for this. Obviously, I have an emotional attachment here. Going to do one of those in the afternoon. At this point, they are only going to be done during market hours. A lot of times when we bring a new product, we do webinars during market hours. We do evenings and weekends. At this point, futures, the server is only up during regular market hours. So going to have a slew of those up, but the first one is Wednesday, and it's going to be during market hours. And please come in and learn about the IdeaHub for futures.
Good stuff, as always. And on behalf of the Viceroy and Uncle Mike and the Greasy Meatball, and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program and for sending in such great questions. Keep them coming, including your trade ideas. This is what I traded. Was it good? Was it bad? Here, I think this was good. All that kind of fun stuff. Send it in. We want to hear from you. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.